Welcome back to Binge Finance. We talk about growth stocks which have pulled back on this channel. In this video I want to look at an underhyped and high growth company which has almost doubled its customer base in the last year, and it's just pulled back 25%. And remember, I'm just a YouTuber, I could easily miss something important, so do your own due diligence. Stocks that have pulled back can easily continue to go down, so never risk too much on any one stock. Right, let's get to it. The company we're going to look at today is called XP Inc. And throughout this video I'm going to be using a website called Benchmark to get a lot of this data, so I'll put a link to that in the description. Okay, XP Inc. it's like the Brazilians' answer to Robinhood. It's a trading platform where people can buy and sell stocks. And that in itself is a hugely growing industry. Just look at Robinhood and how that's grown over the last 5 years. Primarily because Robinhood really started the trend of gamifying trading, making it really easy for the younger generation to buy and sell stocks. But also it's economically led. The fact that most of the world has lowered their interest rates, people just really can't find a safe place to get a return on their money. Whereas previously they may have put it in a high interest savings account. Nowadays you just can't do that. And so everyone, even through to baby boomers, the older generation, they're having to take greater and greater risk by investing themselves in the stock market to try and get some kind of return. So these trading platforms are seeing the benefit of that increased user base. Okay, so this is an underhyped and high growth company, which we're going to see the reasons for. The company is called XP Inc. I'll put a link to that in the description as well. They're a Brazilian investment management company founded in 2001, but after the 2008 crisis, they reinvented themselves into a fully fledged brokerage service. By the time of their IPO in December 2019, the company had 1.5 million clients and 70 billion in assets under custody. This increased to 2.6 million clients and 106 billion in assets under custody by the third quarter 2020. And the largest bank in Latin America holds 44.1% of XP Inc.'s shares. That's considered a pretty good thing because when you've got a large institutional investor, they don't usually sell the stock at a drop of a hat. So you get that kind of security and a bit more stability with the stock price. Okay, let's have a look at the chart. You can see that it IPO'd late 2019 here. And after 3 months it dumped, but it recovered very, very quickly. It only took 2 months, 3 months back to the highs again. But we're back to pretty much where we started. And consider that now we have almost double the customer base, double the net income. So maybe this was just considered overvalued to begin with. I don't know, but it seems like it could be a potential place to buy. And I've drawn this support line. Now, a company that's only been on the market, on the stock market for a year or so, you know, support lines aren't that reliable, but you never know, people might see it as an area to buy. But if you do want to buy in this area, perhaps wait for some kind of strength to come back in rather than jump in too soon, because support lines can be dangerous. I'll show you why. If we go back to the first 3 months, we could have said that there's a support line here. You can see it touched once, twice, 3 times, and then on the 4th time, what happened? It finally failed and broke down with a lot of momentum and velocity. Part of that is because it's a young company and people just don't feel as confident, and you know, traders are a bit more edgy. But this is what happens if there's a clear support line that breaks. You get a potential dump. And what we can see in the larger picture, we could say, well, this trend line's roughly showing these areas are support. And so if the price comes down and fails, it could dump with similar velocity and speed. So you've got to be very careful around support lines. Probably best to wait for a bit of strength to come in and go easy on your trading size. The reason is because you get a lot of people wanting to buy around this area, and if the price fails, they all sell at the same time, and you have a cascading effect, and you also have the short sellers jumping in, taking advantage as well. So that's why you get these exaggerated fast moves. Okay, let's get back to the company details. Now, they've been growing through media, which this is really interesting. Most companies that are in a growing industry find it expensive to get new customers. It's called a customer acquisition cost. But these guys have been quite clever. Right from the beginning, they enrolled customers into investing classes, and they've grown this to the point where they've got different media outlets that just are able to acquire customers at a very low customer acquisition cost. For example, they've got something called Info Money, which is a news website, financial news, and they've got 14 million unique visitors. So you think those unique visitors could be funneled through to their trading platform. It's almost a Trojan horse, if you like, to get people onto their platform. They've also got XSpeed School, which offers over 160 courses and has 50,000 students. They also have XP Research, which produces over 80 equity research reports each month and counts an audience of 1.3 million investors. And then they do live events as well, and they've impacted over 5 million people in 2020. So I love the way they're able to get customers at a lower cost than most of their rivals. And they are growing fast. In 2020, the company acquired Flipper. They've been acquiring actually different companies, but in 2020, the most recent, Flipper enables retailers to manage multiple investments. And this is another thing I like, the fact that they're trying to be a one-stop shop, if you like, serving the customer on all their needs relating to finance. They say, Flipper exponentially complements our service ecosystem by delivering additional value generation to all of our clients. Skimming down here, I've just highlighted the bits that I think are most important here. FinTech Brazil comment that XP is recognized as the largest brokerage investment in Brazil, and not only is it the largest independent broker, but it's also one of the most reliable. This is important as well because a lot of platforms, they just struggle, I've found, to be reliable in terms of uptime. They crash, they have problem with customer services and dealing with an increase in customers and scaling. So these guys are obviously got that sorted. And they say part of the company was acquired by the Itaú Unibanco group in $1 billion transaction, which guaranteed the brokerage greater authority. That's the institutional investing we spoke about earlier. In recent years, XP has shifted its focus onto the retail market. And the retail market is set to grow about 30% each year over the 2019 to 2024 period. The retail market is rapidly growing, as we spoke about, because it's very hard to find somewhere to invest your money and get any kind of return. So we know it's a growing market, but we need to know how the Brazilian market is growing in particular. We know 56% of Brazilians were interested in investing in 2018. However, only 25% of the population made investments the following year. Brazilians have been traditionally characterized as risk-averse, investing mostly in fixed income products. This is due to the experience many investors had throughout the 80s and 90s, where these accounts were one of the few safe investment products, even though they get very low returns. According to a study conducted by Oliver Wyman, the proportion of investments held by non-bank institutions stood at 10% in Brazil in 2019, but it's set to increase to 25% by 2024. For comparison, this ratio already stood at 87% in the US in 2016, leaving plenty of headroom for growth for players such as XP Inc. This is just saying if Brazil follows America, there's just a huge potential for growth. As Brazilians perhaps become more risk tolerant, they're going to start joining these platforms and investing in greater numbers. Supported by the switch in investments from fixed income products to equities. Yeah, fixed income products really are not giving any return nowadays, so people are switching to investing, and that's great for XP Inc. Investors will increasingly look for information and investing tools as they shift away from fixed income products in the equity market, triggering an increase in demand for XP's products. And another thing I really like, it's founder-led. Founder-led companies generally are preferred by investors. There's actually been studies done on this, why founder-led companies outperform. It does make sense. Executives who founded a firm often see it as their life's work, so they're highly motivated to think in the long term instead of about short-term milestones. such as the next earnings report. Many founders have also invested sizable chunks of their life savings into their companies, which means they have significant skin in the game. This does make a difference. Having said that, the CEO of XP has actually recently, last month, stepped down as CEO to become executive chairman. But the reason for this, he's still very much involved in the company. He said that now he's going to be responsible for key growth and strategic initiatives such as innovation and expansion. He's obviously still very much involved and passionate about the company. So who is the founder? He's called Guilherme Benchimol, and he founded XP in 2001 at the age of 24, and he's been the CEO up until last month. And he was part of the Bloomberg's 50 most influential people in the world. It's pretty impressive. He holds a bachelor's degree in business economics. Now we look at the overall finances, which are just stunning. Total revenues increased 55% year over year to 411 million in Q3 2020. Total assets under custody increased 61% year over year to 106 billion. Client count increased 72% year over year to 2.6 million. So this is what I was saying. Over the last year, they've almost doubled. 72% is incredible. Gross profit stood at $261 million, an increase of 53% year over year. Gross margins decreased from 67.2 to 64. That's not a good thing, but it's a very small decrease. You want companies to have better margins because then their net income will be higher. And then this is the one that we care about. Adjusted net income stood at 106 million, up 119% year over year. That's net income. That's the actual profit they've made. It's more than doubled in the last year. Incredible. Now we're going to look at a few of the potential negatives to watch out for. They are focused on the Brazilian market, which might encounter adverse currency risk driven by broader geopolitical events. Now this website here, Get Benchmark, they've said that they've invested, but they will cut their investment if growth in the company falters, or if Latin America's fintech giants manage to make a foray into the low-cost investing market. Basically, if some big competitors step into the market, or if local currency falls versus to the US dollar. This goes back to the issue that it is Brazilian based, and we need to ensure that their currency is competitive with the dollar, because if their share price is going up in their currency but you're converting it to dollars, if their currency is very weak to the dollar, then your gains are just not going to be as big. I'd like to just say as well, this website Benchmark do have their own disclaimer saying that the article, which I've taken the information from, does not constitute investment advice in any form. It's not a research report. And I personally don't own any of this stock. I've just given you a bird's eye view. Because the stock price had pulled back 25%, it looked quite interesting. But of course, if you're interested and you want to dig deeper, then do your own research, and I wish you luck. Don't forget to subscribe if you want to be updated on the latest growth stocks which have pulled back. And I'll see you in the next one.